Good evening, TheoTrade. This is Corey Rosenblumen. You're watching the Theo Nightly video for the 14th of October here in 2020. Half the month's gone, which means November, halfway to it. We still have these headline risk tapes. And the main thing about the headline risk is stimulus on, stimulus off. And of course, not to mention the election, which is when the markets are not pricing in a whole lot of volatility. We'll actually start with that concept right now in terms of the S&P and the ES futures. Tonight's video, we'll just keep the focus on news risk, but also financial stocks. So going up to the the election, right? Financial stocks play into it, but coming up here, 3rd of November, that plays us into this region, right? The first week here in November. Look at your implied volatility. It does creep to the upside, but it's just a percent function. So 19, 20, 21, 25, 26, right here at the election. So that's not pricing in a lot. It's not up to 50 or 60, so one of those comments, watch this space. Keep watching your November 3rd, first week of November, implied volatility. And that's true in the stock market itself. Here's a little easier way to see it right there, because this has a Wednesday expiration, and that'll pop up to 25% for the options that expire after the election. So that's just something to watch as we cruise through to 3 weeks until that election that we're having here in the U.S. But again, the headline risk today and in the run up to that election is, will they meet and reach a stimulus deal? The Speaker Pelosi, the Treasury Secretary Mnuchin came up and said no. Right? The parties and the participants are still far apart, and the market didn't like that. Financial stocks are in focus and are falling. Some of the weakest stocks today were in the financial sector, and they included Wells Fargo. Seems like that can't fall any further, but certainly can. Bank of America, which looks like the broader financial index writ large, which is that right there. Take a look at the progression, the movement of the financial sector. And then Bank of America looks very similar to it. They still have sell signals, and they still are down trending. We also can take a look at some of the energy stocks, but MasterCard, not quite a pure financial in the sense that other stocks will be JP Morgan, similar type of movement, and they're just pulling down away from their 200 simple. Berkshire Hathaway is a financial, but it's more of an insurance company. Just keep that in mind. Of course, here's Apple, which is always fun to look at. Walmart's a big retail name. I know these aren't financial. Microsoft, these are big market cap. And keeping on down the list to Citigroup. So that's where we are in the S&P, and that's where we are as we push into this stimulus on, stimulus off. The one little outlier in today's session was Goldman Sachs, and it had earnings today and beat expectation, at least on revenue, and that sent the stock a little bit higher in today's session. So Goldman did have earnings, and we still have earnings on deck and on play just in general here in the financial market. So what are we doing? There's no headline risk is high. Don't swing for the fences. Just know that either the long or the short side of the market does carry risk, and here's a simplified explanation of the risk. At any point in time, there can be a headline that says we reached a deal on stimulus, and the market and the financial sector will probably go straight up for quite some time, at least a few hours, if not a few days, back to back to back. But it happened today, they did not reach a deal. And so as a result, we had the market. We can take a look at the intraday chart of the financial sector. Not quite as dramatic in the middle. That's your news. That was your headline broke. We're breaking off talks. Or I guess the headline technically was that the Speaker and the Treasury Secretary are at the moment at an impasse. And they just announced that, right? A little trickery and games and news headlines. But that's the risk of the bears. At any point in time, like today's session, they could come out and say, yeah, just so you know, the deal that we don't think is going to happen isn't going to happen. And that would crack the market to the downside and play risk to the bulls. So anyway, moving forward, this is our financial or ES market here with the midday crack. There's the midday crack in the Nasdaq. Crack just means fall to the downside. The Dow Jones and the small cap Russell. Remember, Russell is correlated very well or closely to the financial sector as a broad-based measure. So XLF financials correlates to RTY, which is your Russell futures, or IWM, which is your ETF. So if you think the financial market's going to continue to suffer, IWM or the Russell Index might be the stock of choice, or just the XLF, or if you're really fancy, some of the stocks within the financial sector. And they are under pressure and remain under pressure. And with the absence of stimulus, that probably puts additional pressure on the market as a broad-based world, but also the financial sector as a small piece of the broader picture. And a way to think of it is, again, like this. S&P 500, these are your stocks that were positive, stocks that were negative. The bulk of the market today was negative. The index was negative, but you see the pockets of red. Reddest stock was Bank of America. You can see it here. Right? Actually, Wells Fargo. No. Wells Fargo, right? That's when I look at the percent change. Wells Fargo was the weakest, down 6%. Second weakest was Bank of America, and that's in the S&P 100. Amazon is a retail name, and we have other sectors. The hottest sector today, if you call it that, was industrials, up 0.5%. And you can see some of those names in play. Caterpillar, Honeywell, M, Raytheon, Boeing, Lockheed Martin, and just name a few. I always love showing you stocks that are making new 52-week highs in the videos. The number is lower today. It's about 20 stocks. It is 20 stocks in the S&P making new 52-week highs. That includes Qualcomm, Caterpillar. What else do we have here? John Deere, McDonald's, Best Buy, retail name, and others that you might be familiar with in your own trades. There's Tractor Supply. Logic is that which is strong does tend to get stronger. But as we push forward halfway through October, halfway to November, big old election on the forefront coming up right around the corner, the market's shy of those all-time highs, but there are stocks making new 52-week highs. And again, some of them we point out does include McDonald's in today's session. And Target, just to name a few retail names. But they are late to the party to get long. If you're going to trade these immediately, if you need to put a trade on right now, these stocks are better from the short side or the put side to get a pullback retracement like that to the 20-day exponential moving average. And for Target, that's about 160. For McDonald's, that is, looking back, not that far away, roughly 222 or 2.5. That's McDonald's. Just one quick one. It's kind of an interesting one. Tractor Supply Company. That's giving us a sell signal right now. That's up against the high. That is a new 52-week high, but it's at 155. You can structure out a put type of play to play the market back to about 145. Headline risk, bull bear, stimulus on, stimulus off, polls this way, polls that way, debates, town halls, 2 more weeks, 3 technically, and we're home free. Risk will abound until the time, and maybe even after. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for the 14th of October, 2020.